Hey everybody, C Limited just reported earnings yesterday and I'm going to be reviewing them live. I haven't had a chance to look at them, so that's what we're going to do over the next half hour or so. This is a stock that I do not own. However, Brian Stoffel, my partner, does own it, and this company has scored very well on my investing checklist in the past. So you're going to see me look at the earnings review, check out the transcript, and figure out if the thesis for this stock is still on track. I did see the market's reaction to the report, and it didn't seem to be all that favorable. So we'll check out to see why the market didn't like this company's report. It could just be this is a high growth stock that is losing money, and those stocks have been way out of favor with the market over the last roughly year or so, as evidenced by my portfolio and our returns on stockcard.io. So with that, let's get to it. And thank you to stockcard.io for sponsoring this video. So let's get going. I'm going to start on StockCard and type in the ticker symbol, which is SE, SE Limited. We're going to go down to introduction, and we're going to click over to the company's investor relations website to get that up and running. So yeah, shares down 7% today to about $117 per share. So there's the press release, there's the presentation, infographic, and look at that. They have a transcript right on their website, A plus C Limited, for making it easy for investors. Now, one thing that I like to do quickly is just start on Google and just do a quick search for the stock. And if we go down to the financial section here, we can see, excuse me, just a quick look at how the company did versus Wall Street's estimates. So the estimate was for $3 billion in revenue. The company actually did $3.22 billion. So that sounds good. That was a 7% beat on the top line. The expectation was for a 91 cents loss on an earnings per share basis. The company actually reported 88 cents. I'm guessing that's non-GAAP. It doesn't say, but that would make sense to me. And that was better than expected. So it seems, looking backwards, the company's results were good. So clearly something else has the market spooked. In this environment, it's likely to be related to guidance. So let's take a look. So I have the fourth quarter results up here, and we'll zoom in on that. And let's start reviewing. Okay. In 2021, we continued to focus on sustainable growth and serving the fastest growing and evolving demands and needs of our communities. With our scale, we believe we're well placed to increase leverage efficiencies across our ecosystem for growth and manage the levers of our business to reach profitability across more market segments in 22 and beyond. Oh, okay. So they're not calling for profitability in 2022, but they're saying they're set up. Okay. We currently expect Shopee. Shopee is the company's e-commerce platform to achieve positive adjusted EBITDA before HQ costs allocation in Southeast Asia and Taiwan by this year. Boy, is that throwing a ton of caveats in there, but okay, that's good. Adjusted EBITDA is not a metric that I like, but it is something if you assume that a whole bunch of other costs don't exist. And see money to achieve positive cash flow by next year. I assume that that's 2023, but okay. As a result, we believe that by 2025, cash generated by Shopee and C Money collectively will enable these two businesses to substantially self-fund their long-term growth. So 2025 is when they're calling for those businesses to be profitable. In addition to Shopee's strong growth and growing market leadership in Southeast Asia and Taiwan, we are very excited to see Shopee's fast gaining traction in Brazil. Watch out, Mercado Libre investors, which that, by the way, is my number 2 holding. The 6th largest country by population in the world and our new growth market. Just 2 years after entering the market, Shopee Brazil recorded more than 140 million gross orders in the fourth quarter, closing in at 400% year-on-year growth. Wow. At the same time, unit economics for Brazil substantially improved with adjusted EBITDA loss per order before HQ costs. Boy, that's because I'm interesting accounting. Lowered by more than 40% year over year. All right, so don't focus so much on we're profitable, but they're lowering their costs per order. Good. We're also pleased to see C-Money continuing to scale rapidly with fast-growing user base, expanding product offering, and further enhancements commercialization. It's truly become another strong growth engine for us. We're excited to provide guidance on a full-year GAAP revenue basis for the first time. Oh, that's nice. So they're breaking out C-Money. And while there are some headwinds impacting our digital entertainment business in the near term, okay, so that potential reason for the sell-off, number one, we continue to remain extremely focused on developing Garena's global platform, which we see as a key strategic asset in the long run. I do know that lots of video game companies saw a substantial slowdown over the last couple of months. Roblox, Activision Blizzard, Zynga, etc. So I would say that that is more, if Garena, which is the company's video game division, is seeing slowing growth, that's more industry-wide than it is something that C Limited is doing. Okay. As we look ahead, it's clear that consumer activities and experiences are increasingly converging online at the intersection of content, commerce, and community. We believe our ecosystem comprises a complete consumer tech and innovation stack that is distinctively relevant to the new opportunities being presented. Therefore, we'll continue to focus on best positioning C in the long run to best serve the changing needs of the fast-growing digital generation. Okay. Group. So this is fourth quarter results. Group total GAAP revenue, GAAP generally accepted accounting principles revenue was $3.2 billion, up 106% year over year. Wow. Gross profit was $1.3 billion. So gross profit is subtracting out the cost of producing the revenue, was up 145.6%. So this number grew faster than this number. So the company, it got a gross margin expansion. So just quick math on that. 1.3 divided by 3.2. So gross margin was 40%. And that was up year over year. Total adjusted EBITDA was negative $492 million compared to positive $49 million for the fourth quarter of 2020. So a huge drop in profitability on that metric. Okay. Digital entertainment. Okay, so this is their Garena. This is their gaming division. Revenue was up 104% to $1.4 billion. So 40% of total. Bookings were up 1.1 billion. Bookings is a sign of future demand, and that was just up 7%. So that could be potential reason for the sell-off number two. Well, that's kind of all the same one. Adjusted EBITDA was positive 600 million compared to, that was down slightly. So this is a thing that's funding the other two businesses. Adjusted EBITDA represented 56% of bookings in the fourth quarter compared to 65. Quarterly active users reached 654 million. My God, that's a tenth of humanity is playing the company's games, an increase of 7%. Quarterly paying users grew 6% to 77.2 million, representing 11% compared to of quarterly active users compared to 12%. So the user base grew slower. So they're getting tons more revenue from a smaller number or from a larger group of paying users, but more per user. So what's that about? Yeah, 12% of people are paying users. Average bookings per user were $1.70, in line with the fourth quarter. Our self-developed global hit Free Fire continues to maintain top global rankings. It remains the most downloaded mobile game in the fourth quarter and the full year. Previously known, okay. Ranked second globally, average monthly users across all mobile games on Google Play. Continues to be the highest grossing mobile game in Southeast Asia. Was the highest grossing mobile game. Craftland, our recently introduced Free Fire map editor, gained strong traction, launching the most popular maps, being subscribed by closely 40 million users so far. Okay, so this is like a tool for Free Fire users to engage with their community. Multiple prototype games across different stages. We expect to expand our portfolio with more games across diverse genres such as multiplayer, role player, sandbox, and casual games. So lots more games in the work. Okay, e-commerce time. So this is Shopee. GAAP revenue, generally accepted accounting principles, was up 90% to 1.6 billion. Really good, strong results. Included 1.3 billion of marketplace revenue and 0.3 billion of GAAP product revenue, up 48%. Okay. Gross merchandise orders totaled 2 billion, an increase of 90%. Gross merchandise volume grew 53% to 18.2 billion. So their take rate went up. Adjusted EBITDA was -9, almost 877 million, was up huge. So compare that to that. This is a very, very, very unprofitable business for the time being. Probably because they're expanding. Adjusted EBITDA loss per order before allocation was 15 cents, an improvement from 21 cents. We believe that in line with the continued scaling of the platform and sustained improvement, Shopee is currently on track to achieve positive adjusted EBITDA by the end of this year. So that would be a substantial improvement from negative 900 million. Okay. We already read about this. They're kicking butt in Brazil. For Shopee, the loss per order was 45 cents compared to 41. Why? From other markets, which are much earlier stage of development. Okay, so they're expanding. So obviously, when they're expanding, you have to do a whole bunch of costs ahead of the growth. So that's why that metric is not looking all that great right now. Shopee ranks first in category by monthly active users and total time spent in the app, not on gross merchandising volume. Okay. In Indonesia, gross orders grew 88%. Shopee continues to rank first and total spend in the app. Okay, so they're doing good in Indonesia. First by downloads and total time in the app, and second by monthly average users. Shopee ranks in the same category for Google Play. Shopee ranked first globally for total time spent in the app. Okay, so people are using it. Building brand recognition, YouGov's best global brands, and ranked 6th overall. Okay. Digital financial services. So this is Shopee C Money. Revenue was up 711% to $200 million. My God, that is some insane growth right there. But only 200 million. So total revenue was 3 billion. So small, but man, is it growing fast. Hugely unprofitable. Look at that, the relationship there. So hugely unprofitable business, although it was down from the loss last year. We're focused on improving growth efficiency and expect the segment to achieve positive cash flow by next year. Wow, they must be anticipating enormous growth this year. Quarterly active users reached 46 million, up 90%. In Indonesia, which has the most comprehensive set of products, over 20% of quarterly active users have used multiple C products or services. We view this as a highly positive indicator of the leverage. Total payment volume up 70%. Okay. So for the full year, revenue more than doubled to $10 billion. Gross profit grew faster again. So for the full year, gross margin, 3.9 billion divided by 10 billion, 39%-ish. Again, gross margin expanded. Adjusted EBITDA was negative 600 million. So that's a negative 6% adjusted EBITDA margin compared to positive in the year before. Digital entertainment doubled. Bookings only grew 44%. E-commerce doubled. Digital financial services were up huge. So for the full year, they represented about 469 million divided by 10 billion. So only about 5% of revenue from the digital financial services, but obviously this is the fastest growing segment. Okay, guidance. For the full year, we currently expect bookings for digital entertainment to be between 2.9 billion and 3.1 billion. What was that this year? That's fourth quarter. 4.3. So, okay. GAAP revenue is 4.3 in digital entertainment, and they're guiding for 2.9 to 3.1. So there you have it. They just said digital entertainment revenue is going to decline. That could be a reason the stocks are falling. While many economies reopening further in the fourth quarter, we observed some moderation in online games. Due to unanticipated government actions, Free Fire is currently unavailable in the stores in India. This guidance takes into consideration these headwind factors. The midpoint of our guidance of $3 billion reflects our current expectations that our bookings will be close to 2020 and considered the uncertainty of India. Okay. So they're expecting a decline in revenue in the gaming division. Okay. GAAP revenue for e-commerce to be between 8.9 and 9.1 billion. So it'll be substantially the bigger portion of revenue in next year, increasing 76%. And for the digital financial services to be 1.1 to 1.3, striving 156% growth. So they're more than double digital financial services, about double e-commerce. So if you add all that together, what's 10, 13. So top line growth of roughly 30-ish%, which with the gaming as a heck of a headwind. Okay. So the headline numbers are good, and the forward guidance, especially on the digital entertainment, looks poor. Hence the potential for the sell-off in the stock. It'll be curious to see if that repeats into 2023. But huge top line growth. The margins there are good. The margins there are worse. And then about break even there. G&A spending. So I'm going to be looking at year over year. G&A spending just about doubled. Research and development spending just about doubled. Sales and marketing spending just about doubled. I mean, look how much they're spending on marketing to drive that much gross profit. So 100% of their gross profit is being plowed into sales and marketing expenses. So they are really trying to keep the foot on the gas there. Net loss was $2 billion. Stock-based comp, excluding that, was $1.5 billion. I think the company's market cap, what was the company's market cap? Market cap is $65 billion currently. So that's quite a bit of money they're setting fire to. Okay. We kind of read through this. So gross margins, other revenue, sales and marketing expenditures increased hugely. Sales and marketing increased double. So their biggest sales and marketing increase was in e-commerce, ramping up of marketing incentives and online marketing efforts, which we continue investing in capturing market opportunities and expanding across markets. So that's a huge driver of spending growth in sales and marketing. General and overhead costs, higher staff compensation, more staffs, credit losses for a digital financial services business. Those are included there. That's interesting. Research and development costs more than doubled. Staff force, okay. Net operating loss of $71 million in the fourth quarter. Oh, that's non-operating. Excuse me. So those are non-operating expenses. Income tax expense of $100 million. Net loss was $613 million, of which excluding stock-based compensation was $483 million. So stock-based comp about $130 million for the quarter. Not terrible given this company's size. 88 cents. Okay. There's the full year numbers. They're going to match a lot of those. And let's take a look at the balance sheet. Did they give us the balance sheet? There's those. Net loss. Revenue, balance sheet. So as of December 31st, cash, $9.2 billion. Another $1.5 billion in restricted cash, which is cash that is in cash, but they've already accounted for spending elsewhere in the business. Accounts receivable up very modestly. Prepaid expenses looks good. Loans receivable of $1.5 billion. Yowzer. Short-term investments, $911 million. So call that $10 billion in cash. Non-current assets, long-term investments went up big there. So I'll call that $11 billion if you want to add that to it. Goodwill, they acquired something. Liabilities, Total current liabilities of $7 billion, most of which is accrued expenses and other payables of $3.5 billion. Deferred revenue. So this is cash that they have received, but they haven't been able to book as revenue yet. So this is a liability, but it's not really a liability because it will become future sales. So just that's what that is. I would say this is a liability. So the convertible notes here is $3.5 billion. Convertible notes with companies like this usually convert into stock, not in, and don't have to be repaid back in debt, although the details are going to matter greatly. So that could either represent future share price dilution or a hit to cash. But with $10 billion in cash and much of that being deferred revenue, the company's balance sheet is in good shape. On that front. Okay, let's go through the slides and see if we learn anything else. Revenue is up. The bookings was, so that could be a potential DFS gap revenue. Oh, digital financial services, e-commerce, and digital entertainment. Wish they just said them. Digital entertainment, global base, $654 million. So that was down substantially quarter over quarter, another potential cause of concern. Paying users, down quarter over quarter. So the gaming business is really under pressure right now. So I would say the quarter over quarter numbers are worth looking at there. So this Garena peaked in Q3. Okay, e-commerce, all trending in the right direction. Digital financial services trending in the right direction. Gross profit really trending in the right direction. These are non-GAAP Ebitda and the sources of their losses. Cost of revenue was up. Sales and marketing was up huge. Again, they're spending big time there. They're spending big time across the entire company. Net loss, we talked about. Cash balance, so they call it $10.2 billion. Okay, and for the full year, this is probably what's spooking the market right there. Okay, that's an infographic. Let's go into the prepared marks to see if we can learn anything else. Okay, this is Forrest. I think his name is Forrest Lee. He's the founder and CEO. Forrest Lee. Yes, I got that right. The CEO and chairman and the founder. Hopefully you guys can read that okay. One too many. Okay. We continue to focus on growing and evolving our business. We have invested with vision and efficacy. We have greatly deepened our engagement with customers and small businesses, expanded our market, our growing scale, placed leverage efficiencies across our ecosystem, how we plan to manage to grow moving forward. We now believe we're in a strong position to manage the levers of business to reach profitability. We saw that in the commentary before. We expect Shopee to achieve positive EBITDA before HQ costs. Yeah, that's a heck of a caveat, but by 2025, cash generated by those two businesses will be self-funding. So that's when they really expect to be profitable, 2025. They will generate meaningful cash in our existing core markets while they continue to invest in the third market. We plan to invest in Shopee and C-Money with efficiency. We have $10 billion of cash, including close to $7 billion raised last year. So they raised money at favorable prices. We intend to invest in growth in Shopee and C-Money. We believe you have the financial resources to grow the business to the inflection point without having to heavily rely on cash generated from the digital entertainment business. Of course, any additional growth from Garena would further strengthen our position. We remain extremely focused on developing Garena's global platform. Okay. Resource allocation. Shopee Latin America and Brazil will be our two top focus areas for investment. Our investment in the overall impact of the bottom line is likely front-loaded as unit economics and profitability generate improvement with scale. We'll continue to invest in Shopee Latin America with a focus on Brazil. Much easier for us operation, just focus on 7 existing core markets. However, we strongly believe that by investing prudently and sustainably in Latin America, we will generate significant value for our shareholders in the long run. So they are really targeting Mercado Libre's home turf. We do not underestimate the challenges of any new market expansion. Established track record 7 times in 7 highly diverse, complex markets. When we started, we had significantly less resources. Growth trajectory, it generally followed patterns where we were first able to manage strong user growth and order growth with improved efficiency, achieve leadership and scale. I will share greater detail, discuss the segment results, okay, in managing growth in the market. Achieving success in Brazil, which is the sixth most populous country in the world, where the profitability model has been long proven, would allow Shopee to substantially expand its total addressable market, significantly enhance its competitiveness, and further diversify its business. Our investments are already a strong competitive moat for us, and we aim to develop deepening this advantage. We intend to ramp up investments in R&D. Such offerings and the features range from UGC tools in Free Fire and engagements, improved security and risk management, just to name a few. Okay, they're key to curbing our competitive moat. I would like to share our longer-term view. It's clear that consumer activities and experiences are increasingly converging online. Agile, adaptable communities can successfully tap into engaged social communities. Our three core businesses collectively offer immersive and interactive digital, social, and commercial experiences supported by our fast-growing digital. Okay. This is a whole big wind-up to talk about our performance. Okay. So the longer term, they're still bullish. Big surprise. GAAP revenue increased 1.6 billion. Yeah, we kind of reviewed all these numbers. We currently expect bookings to be this. With many economies reopening in the fourth quarter, we've observed some moderation in online activities and fluctuation in user engagement. Due to unanticipated government actions, as we previously reported, Free Fire at least currently unavailable in Google Play and iOS stores in India. India is kind of a big market. Our guidance takes into consideration these headwinds. So if India opens up, that could be a tailwind to revenue growth. $3 billion represents our current expectations that our bookings will be close to levels in 2020. Considerable uncertainty in India. Assess our long-term markets. We expect GAAP revenue for e-commerce to be between 8.9 and 3 billion. 2022 outlook for the financial services time. Yep. Businesses in even more detail. Okay. Bookings, adjusted EBITDA. We read about this already. We're doing really good there. We have a crossover event with Assassin's Creed, one of the most popular video game franchises. To have BTS, one of the world's most streamed artists, enter the universe of Free Fire as a global brand ambassadors in the coming month. Okay, so if you're a fan of BTS, they're coming to Free Fire. We have seen strong engagement with user-generated maps. We started about that. The other games in our portfolio continue to perform well. Arena of Valor has grown year over year in 21 across both active users and bookings, despite being its 5th year of operations. We expect a portfolio of more across games. Our priority remains sustaining and growing our existing major franchises. Yep, we're going to continue to build them out because you don't want to be dependent on any one game. These games are the most engaging, immersive forms of entertainment. We're well positioned. Highly focused on maximizing long-term potential of Garena. E-commerce, Shopee crushed it. We saw that they're doing especially well in all markets. Leading position. Digital downloads, we're doing great. Brazil is really kicking butt. 140 million gross orders. That's incredible. I mean, that's just incredible. Shopee, Southeast Asian. Adjusted EBITDA, newer markets, Taiwan and Brazil. C-Money really doing well. Quarterly active users were up 90%. So month active users were up 90%, but usage was up 711%. So people that are joining it are really using it a lot. We launched C-Bank Indonesia. We obtained a bank license in the Philippines. Expanded our offering across credit, insurtech, and digital banking services. 20% we noted in Indonesia. $5 billion. What's this? We expanded our payment accepted points to include Air Asia, 7-Eleven, and Subway in Thailand. Interesting partnerships. Opportunities to roll them out. Business growth. Proud of the team. Thanks to our shareholders. This is going to be way into more details about the about the year and the quarter. And we talk up in the call for questions. Okay. Um, so let's say takeaways for me. Trailing revenue was very good. Actually, let me show one more thing. Let's go to, if we go to Yahoo Finance and we go to the analysis tab for the year. So this is for the full year ahead. Wall Street was expecting 1.4 billion in revenue or 40% growth, and they expect another 36% growth year after, with a big loss in the bottom line. So 1.4 billion. So if we add those up, that's 3, 9, that's 12, 13. So they were expecting 14 billion and they got 13 billion. That is likely to be, along with the worrisomeness about the slowing sales of Garena, is likely to be the reason for the selling pressure recently. Of course, if you look back and look at the stock over any longer period of time, it's peaked in November of 2021, like so many growth stocks did, and just been straight down since then. So trading at if you buy $13 billion in sales for the year, so 65, let's do some quick math. 65 divided by 10 billion in trailing sales. So they're trading at 6.5 times trailing sales, divided by 65 billion divided by 13 means they're trading at about 5 times forward sales. Those numbers are obviously much lower than they have been in the recent past. However, remember that this company has a relatively low gross margin. The gross margin is 40%. So if we look on a gross profit basis, gross profit over the trailing 12 months was 3.1 billion. Again, this is according to Yahoo, so that might not be entirely accurate. I'll just go over here to the full year numbers and look at that just to get a better idea of how shares are currently being valued. So for the full year gross profit, okay. So for 2021, gross profit was 3.9 billion. The market cap is 65 billion. Again, assuming that that's correct, because that can sometimes be wrong for companies like this. So it's trading at about, let's see, 65 divided by 3.9. It's trading for about 16 to 17 times gross profit. That's a better indication of value to me than the price to sales. So my big takeaways are thesis is still on track. The Garena numbers is likely to be the cause of a lot of the recent the quarterly related sell-off, but the business is still crushing it. And if you bought this company because of Shopee and C Money, those two businesses are still doing very, very well. The thesis for this company was largely that Garena was going to generate profits that were going to be deployed into C Money and Shopee, and those two things were going to carry the growth long term. And if that's your thesis for this company, which I think it should be, I see thesis on track. And the valuation has been completely reset, understandably, given the sell-off in growth stocks. So I am personally, given that they beat the numbers, I'm personally happy to give this company the thumbs up again in my stock card portfolio, especially at the lower prices. And while Brian Stoffel is not here, he's returning tomorrow. By the way. I know that he would be happy to give this company the thumbs up again too. So with shares currently trading at 117, we'll just call that 9 shares. Thumbs up. We'll re-rate them in the anti-fragile portfolio, buying 1,000, and then we'll go to my quality checklist and do the same thing. And then I'm going to take a look at the wonderful questions that we got. No doubt people providing even more color than I just did. Okay, so tell me what I got wrong, because I probably got some stuff wrong. Hello? Okay. Miguel says the Spook is e-commerce segment increasing losses. Yeah, that's something to keep an eye on. However, they're increasing the losses because they're investing so aggressively into Brazil. So that's a big reason why the losses are increasing in that segment. That's a good reason for losses to increase if they're saying, "Hey, we're seeing such huge demand for our product in that the market." Uh, Question from Stephen about how they got caught up in the crosshairs of the Indian government. That I do not know the answer to. The issuance of shares, yeah, they were raising capital. Bad cash flow. The growth cannot be bought at any price, similar to Mercado Libre. Thank you for that. The losses, sure, the losses are still there. This company is trading losses for growth. And yes, there was also some quarter-over-quarter declines on the engagement side of the gaming business. Yep, I think that this is the source of the decline today too. The growth guidance is low compared to the trailing. Again, almost entirely due to the gaming business. Let's see, money team. Shapley is currently a battle attrition with the other giants. Thank you for that. Thank you for the comment there. Here's an interesting question. Do you think that they have concerns that Seed can take meaningful market share from Mercado Libre? It's possible. It's possible, certainly something to look at. However, there's no reason that there can't be more than one winner in a growing market. And if you look at what Mercado Libre has done so far, especially with its Mercado Pago, its payment platform, that company's growth hasn't skipped a beat so far because of C Money. And the opportunity in Latin America is just enormous. But that is absolutely something to watch, which, by the way, if you're concerned about that, there's no reason you can't buy Mercado Libre stock and C Limited stock if you are worried about this. Uh, Thank you. Hello, everybody. Uh, the losses and questions here about Pubmatic. Yeah, by the way, if you guys like these earnings reviews, we're happy to continue doing them. I also saw that stocks like Pubmatic were down a little bit. I saw that GoodRx was down a little bit. I have not reviewed those earnings reports at all. So if there's any interest in me reviewing those earnings reports tomorrow, I'm happy to do so. We might even have Brian Stoffel back to tomorrow. So if you'd like that to happen, please let me know in the comment section below. But overall, I see a C Money, C Money, C Limited is doing the thesis for this company is still largely on track. The gaming division is what's holding back growth right now, which makes sense. So many gaming companies had so much demand pulled forward, and I would say that C Limited is especially prone to that, given the huge dependence and popularity of Free Fire. Right, if the huge enthusiasm for that game starts to wane, like we've seen with games like other massive games, that could be a significant headwind to this company's growth. But they are calling for free cash flow contributions from Shopee and C Money in 2025, and they're still growing at a very acceptable rate. And the price today is far more appealing than it has been over any time in the last year. So we gave it the thumbs up in our portfolio. If you want me to do other earnings reports, again, Pubmatic and GoodRx are two that were thrown out there. Happy to do those tomorrow. So let me know in the comment section below. I hope this was useful. See you guys next time. Brian, out.